Okay, and one big stakeholder in this market, equity markets, and overall is LIC. The company delivered its Q1 earnings. Now, the annual premium equivalent, to APE as we call it, has seen a 28% year-over-year rise, and the assets under management are also up about 7%. The VNB, or the value of new business margin, however, has dipped to 13.6% in Q1 versus 15% in FY22 because of a change in the product mix. Raj Kumar, who is the managing director at LIC, joins us now to talk about that. Mr. Kumar, thanks a lot for joining in. I want to start by asking you about the growth that you expect in the full year of FY23 on the APE front, the annual premiumized premium equivalent, the APE growth. What could it be for the full year?
Yeah, good morning. You see, what we have already said in the previous interviews also, that we are looking towards increasing our non-par business in future. Plus, we are also working on the non-single premium. Both of these will be contributing to the AP. The Q1 figures, as you have rightly conveyed, is that on year-on-year 28% growth in the AP. What we are looking at is that we continue to have this kind of momentum in future as well. And since overall the market's economic situation is improving, so we believe that this kind of growth will be possible for the full 1 year also.
Mr. Kumar, good morning. IRDAI had given a target to all life insurance companies, right? The premium growth target. What is LIC's target and is it achievable?
See, we have to look at this thing from this angle that the protection gap in India is at 83%. The penetration is just 3.2% of the GDP, and the density is at $59 US, which is comparatively low even with the many Asian country standards also. So there is a lot of scope for the life insurance sector to grow. Yes, the targets which are given looks to be a little stiff, but we will be working towards that, to put all the strategy in place to see that we try to achieve those targets.
Okay, but what is the target, sir, specifically?
No, specifically, nothing has been conveyed in writing to us presently, but there was a discussion, and it is in the range of 30-35%.
30-35%. Okay, but nothing officially has been communicated in writing to you, you're saying?
Yeah.
Got that.
There was a discussion some time back.
Yes, and we've been reporting and sort of telling our viewers about that as well. Now, with regards to the value of new business margin quarter on quarter, which has come off, what exactly changed in the product mix, if you can explain that?
See, in the Q1, we had a very high premium coming from the funded PNG schemes, pension and group schemes. And in the funded schemes, the margins are a little lower than the other business, which has impacted the margins in the Q1. What we believe is, and we have been telling that we are looking at a longer horizon to reach the industry levels in the VMB margins also. Traditionally, we have been, for the last 2 decades, we were selling very heavily on the par side. And the non-par side is now in our focus area. And gradually, we will be reaching the levels which industry levels are there. And we are keep giving a horizon of 4 to 5 years, which we have indicated during the road shows as well as earlier interactions as well.
Mr. Kumar, the biggest advantage for LIC, and it's synonym with insurance in India, right, is your vast network of agents. It's a family in itself, right? And now the regulator is considering a proposal to for agents to mandate, to mark down the commission on the policy document itself upfront. Do you think that will hit business or not quite?
You see, the industry, I mean, their various stakeholders are already represented to the regulator on this issue. In nowhere in any industry, this kind of figures are given upfront. But yes, for the transparency, probably it is a very good thing to mention it upfront. But India as a whole is not a very mature market. The rebate being asked by the policy holders is rampant throughout the country. And when it is shown upfront, probably I don't know how this rebating will go. But at the same time, the regulator has not taken a final decision on it. They had indicated that it's on the discussion stage only, and they will take into account all the pros and cons of the proposal. But as a whole, yeah, this is a very transparent thing for the policyholder to understand what kind of commissions are being paid to the agent on a particular line of business.
Sir, I want to ask you a little bit about the VNB margins. I know we spoke about that briefly, but in this quarter, the margins fell to 13.6% from 15.1%. What led to that fall? And earlier, you had guided for a VNB margin band of 20 to 25% by 2027. Given the pressures that you're seeing now, would you want to change that guidance in any way?
No, 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 no. We don't want to change that. You see, we are taking a number of decisions internally. The number one is that we have already strategically decided, and we had conveyed it many times, that in the next 5 years, we are going to launch on the non-par products. We are going to put a reward and recognition system for distributors also. And extensive training sessions have already started to make them aware about the need and the market which is available for the non-par products. It's not that the non-par products are new to LIC. There was a time some 30 years back when we were selling majorly non-par products only. So our teams are knowing about it. But the strategically is that we will be putting more focus on the non-par side, but we have to also take into account that I am not going to weaken my strength, which is on the par side. So what we are looking at is a normal growth happening on the par side and a very high growth coming from the non-par side, which is already happening. And the tie-up with the banks, which is there, we are having the largest outlets available. We are already in the process, and we have started targeting them, and we are expecting that a very handsome growth which will be more than 100% kind of thing in the non-par side should happen this year.
So just to go back to that earlier point, I mean, there is, of course, business as is, and how business will be if IRDA has its way, because there are so many of these new regulations which are being proposed, under discussion, etc. So let's come to expenses of management, where the regulator is essentially asked you to curb that. Do you think that is doable? There is also, I think, a proposal for you to bring it down every year. Just your thoughts on that and how that will impact business if it were to come and be made a rule.
No, the first thing is that presently the regulation said that the expenses of the management will be taken line of business wise, which was a cause of concern for the industry as a whole, and industry was representing that the expenses of management will be on the total business rather than the segregated business lines, to which the regulator has shown a very positive response. The second part is that already there is a limit of 15% on the expenses of management, and LIC is working well within those limits. But having said so, yes, there is a scope for bringing it down further. It can be achieved in many ways. Number one is the growth in the total premium income. The other is the cost efficiencies, the digitization processes. And as an organization, we are working on all fronts, including increasing the persistency levels of the enforced business also.
Okay. Mr. Kumar, one last question from my side. Traditionally, of course, LIC, of course, is the behemoth, right? I mean, it still is. But with a lot of new private players now coming in and with aggressive marketing, purely for the term insurance plan, I think you have Anmol Jeevan and Amulya Jeevan. You can correct me if I'm wrong. But
Jeevan Amar.
Yeah. Okay. So
Jeevan Amar and Tech Term.
Okay. So what kind of market share do you still retain in terms of the pure life plans?
You see, the COVID-19 situation was actually very bad for the life insurance industry as a whole. And we understand that the term products sold by our competitors, they came under pressure because a lot of claims were reported. We also had claims under the COVID category being reported. But when we analyzed our business profile, we found out that they were well within our assumptions presently. The excess claims which happened due to COVID has put pressures on the pricing. What we believe is that the reinsurers are asking for a hike of up to 30-35% in the premium rates, which will make it a little costly. Our product, Tech Term, which is an online product, is very competitive presently in the market. Yes, there is a great market available for us, particularly the millennial segment, which prefers this kind of things, and we have started working over that also, popularizing our products. Since we have a very large basket of par products, which traditionally our agents were very comfortable selling in the last particularly 20 years. So we are now training them that there's a big market available which need to be tapped, and we have already started having a traction on this side. But if you look at the overall percentage of purely term products, it may look small, but you have to see that in the overall business which LIC is underwriting. But in absolute terms and numbers, these numbers are increasing at a very high pace, and we expect it to continue in the future as well.
Okay, all the best, sir. Thanks a lot for joining in.